All right, so welcome to Why Tax Reform Has Failed and How to Fix It. We have some very distinguished panelists for you today. My name is Dan Johnson. I am the Executive Director of the Tax Revolution Institute. Am I standing close enough to the mic? Can you guys hear me pretty well? Audio is good? Fantastic. All right, so the goal of this panel is to bring forward ideas that are never discussed in the tax reform space, or if they are, very rarely. So we're not going to discuss the flat tax or the fair tax or all of the ideas you've generally heard before in tax reform. There are plenty of great organizations that do that already. What we're going to do is we're going to bring forward perspectives that you really haven't heard when it comes to tax reform, that people are not considering when they're using their tax reform plans. So we have an expert on the Federal Reserve and how the Federal Reserve impacts tax reform and the effects tax reform has on the economy. We have the assistant assistant controller for the state of Nevada, who's going to talk about how tax reform affects the states. We have Robin Koerner, who is a communications expert, author of If You Can Keep It, and he'll be talking about how do you get both sides of the aisle on board with tax reform. Then we have Kelly Miller, who is a attorney, and this is the only one I can't remember off the top of my head, an associate with Reed Smith LLP, a tax attorney, who will be probably the most loved panelist here today. So I'm not going to belabor the point of why we need tax reform. We have a suffocating tax code. We have a tax system that is unbearable for Americans. And we have a tax system that is non-territorial and reaches out to American citizens who don't even live here. So we literally have come back to taxation without representation as a country. And what I'm going to do here is a different tax panel, a different type of tax reform panel. So I'm going to introduce each panelist and what they're talking about, and they're going to give an opening statement of a couple minutes. Then we're going to ask several questions of the panel, and then you'll be able to ask your questions just by coming up to the mic and talking to the panelists. So I want to start with Jack Boyle. He is the co-founder of Put Growth First. I want you to talk a little bit, give your opening statement. Yeah, absolutely.
Thanks, Dan. Can you hear me? Am I? Okay. It's an honor to be here, first of all. Thank you very much. And it's a pleasure to speak with everyone. When I thought about the question, as Dan discussed the panel, why hasn't tax reform worked, it occurred to me that my guess is that most of us in the room here would agree that tax reform hasn't worked, but we may not all be on the same page about exactly what it is that we mean by that. What exactly is it that we expect tax reform to do? Now, if kind of dovetailing into the project that I am involved with right now is a program called PutGrowthFirst.com. We think economic growth is the thing that the country's lacking and the thing that we need. And you can see from the slide that's up on the screen right now, our research suggests that the natural rate of economic growth for the United States, we experienced that for 180 years, from 1790 to 1970, is just about 4%. And of course, it wasn't a straight line, but it always came back to that line. We suffered through civil wars and assassinations and world wars and panics and that kind of thing, 4%. Around 1970, 71, something changed, and we started deviating from that line. And so go to the next slide. In fact, we've had a significant drop since then. The growth rate since then has been a little bit over 2. And in fact, it's slipping. It's been going lower and lower. The gap between our economy right now and where we would be if we had stayed on the 4% growth rate is $9 trillion. Our economy is $9 trillion smaller than it should be if we had stayed on the 4% growth rate. And just for purpose of comparison, during the financial crisis in 2008, the recession took about $1.5 trillion out of the economy. This is, what is that? 6 times more, okay? And that was talked about as the greatest financial crisis since the Depression. So, economic growth. Let's get some economic growth, and tax reform is a way to do that. Now, one more thing that I think you need to understand from the way we think about it, and there's lots of research that we have on our website, and that I'm glad to provide, but I'm simply going to state these things as fact. There's research that we believe shows this. Economic growth only comes from private investment. It's the only place. Government can't grow. They just move money from one pocket to another. And so what we need to grow the economy is private investment. And we have research that suggests that for every dollar that's invested in new business assets in the economy, we get 45 cents of new economic activity every year compounded for the life of that asset. So if we want to grow a $17 trillion economy by 1%, we need $170 billion in new economic activity. So we need to invest an amount divided by 0.45, it comes to about $378 billion. Now, there are literally trillions of dollars laying on the sideline, doing nothing, or in hedges or that kind of thing. So the money's out there. The tax reform that I'd like to see, from my perspective, is any change in the tax code that gets somebody to invest another dollar, or $2, or $10, or $100 million, or $1 billion, or whatever. And so how has that worked? Well, actually, we've had that over the last, since 1980, we've had that happen 3 times, tax reform. And so go to slide, that's the one that I want. 3 times we've had it. We had the Reagan tax cuts, and you can see in the 80s we had a nice spike in economic activity. We had the Gingrich-Clinton contract with America capital gains tax cuts in the 90s, and then we had the 2003 Bush tax cuts. And each one gave us a nice pop in economic activity. But why didn't it solve everything? Why aren't we back on the 4% tax growth? Well, the reason is the Federal Reserve has a mandate to do a couple of things, one of which is to guard against inflation. And they have this misguided idea that the way to do that is by focusing on people's wages. And so every time wages in the United States began to rise during these expansions, the Federal Reserve would become alarmed and would raise interest rates continuously over a series of time until they finally crowd out economic activity and caused the recession. And so I've taken too much of my time already. So the bottom line from my perspective is tax reform does work, and it works every time until the Federal Reserve kills it, which they do as a matter of policy.
Geoffrey, talk about tax reform from the perspective of the states.
All right, thanks. So when we talk about tax reform at the federal level, what often gets overlooked and not resolved till much later is the downstream effect that federal tax reform might have on state finances. Because the reason for that is because there are 31 states that tie their definitions of taxable base directly to the Internal Revenue Code. So definitions of things like taxable income or deductions or exemptions point specifically to an Internal Revenue Code portion, or usually there's a provision that says whatever new provision replaces this at some point in the future. So what that means is that when Congress changes the definitions of deductions and other things like this, you change the taxable base or taxable income at the state level. Now, looking back at the 1986 tax reform under Reagan is a great example because after that happened, part of that tax reform was that at the federal level, we eliminated several deductions and streamlined a few others. The effect of that was that at the state level, and the federal level too, the amount of taxable income actually increased. Now, at the federal level, they were reducing tax rates at the same time. However, state tax policy has their own rates. So basically what wound up happening is that states were still taxing the same amount but on a larger base. So they wound up getting a windfall from federal tax reform. That's, for people who are interested in federal tax reform, I don't think many of us want to create a windfall for states, for state governments. So this is one thing that really has to be considered ahead of time when we're talking about the contours of what the federal tax reform might look like, because going back to the 1980s, there were a large number of states that wound up cutting their tax rates a few years later, but they still got way more revenue over the course of the next 5 to 7 years, and some never cut their tax rates. So it funded the expansion of state governments, and since I'm pretty sure that's not the goal of anyone here, this is something that needs to be considered at the state level and coordinated from state policymakers to what's going on in Congress, and really thought through ahead of time.
So, Robin, I want you to speak specifically to the people side. As we've kind of joked about before, you're the closest to representing an average person on the panel. But I want you to speak to the people side of how do you sell tax reform to the American people? Because Tax Revolution Institute in February, we asked the Joint Committee on Taxation Chief of Staff in a closed-door meeting. We asked him, why hasn't tax reform resonated with the American people? Why hasn't a specific type of tax reform resonated with them enough to get Congress on both sides of the aisle to actually advance tax reform? We haven't really had that since 1986. And he was unable to answer. He said, I'm just an economist. So from the people perspective, from the political communications perspective, why would you say that tax reform has failed to reach out to people? And what would you have to say about that?
Thanks, Dan. Yeah, I'm the nearest to a normal human being on the panel because I'm not a tax expert. That's right, just to be clear. But my mother definitely wouldn't have me called average in any other sense. Right, yeah, so I kind of got passionate about this a few years ago when I had a tax return that had an annual gross income that was actually sub-median. It was low enough that I was triggering an Obamacare subsidy. But my tax return was 149 pages long. 149 pages long. And 100 of that was to the feds, and some of it went off to the different states, whatever. Now, my income tax bill was $1,000. My accountant's bill was $2,000, right? Which was a significant fraction of my income that year, right? Things are a little better now, I'm pleased to say, but that was that year. Now, this is obviously absurd. It's absurd because let's just be clear, let's get really fundamental. It's unconstitutional and immoral on its face. It's unconstitutional because it puts an undue burden on me to stay out of jail and hold my assets, right, my property. Because I have to either pay somebody $2,000 to do this, and by the way, he didn't get it completely right because there's 75,000 pages of tax code, and that's too much even for a professional, or I have to do it myself. And I have a triple first class degree in physics from Cambridge, and I swear to you, I could not reverse engineer that 149 pages if my life depended on it, right? So it's unconstitutional and it's immoral. So you would think then that this regressive complexity, which is what it is, right? It's regressive because to deal with the complexity, it's harder for poorer Americans, right? Those earning least. You'd think that would be kind of an easy sell politically, but it isn't, is it? Obviously, the folks on the right are more or less ideologically well-disposed to some kind of tax reform, and we can argue about the details. Folks on the left aren't, generally. So we get into this ideological opposition when it comes to proposals. In other words, we're having a political discussion. But step change, political step change, really starts in the culture, right? You see what happened in my native land of England with Brexit recently, right? Or look at what's happening on the right with Donald Trump and that phenomenon. Politics are changing, but it's coming out of a cultural reaction to something. To what? To a perceived, immediately felt injustice. And how is it being turned into a political reaction? That injustice is getting reflected back to the people who already feel it. Nigel Farage in England wasn't explaining to people some worldview that caused them to leave the EU. Trump isn't some articulate expounder of political philosophy. No, he's reflecting back to people where they already are. Now, how do we reflect back to the left specifically? Because they're the hardest ones to get on board. We need enough of them that this becomes enough of a mainstream issue that we can get it through politically, right? How do we get them? We have to understand that the politics of the left is largely, A, the politics of good intention, but more specifically, the politics of showing care for victim groups. So we have to make the current tax system clearly a victimizing system. We have to identify victims, and we have to group them as a group of victims of the tax code. And tax system more broadly, which is why what we're doing at TRI is so important. We're going to change the cultural landscape. We're going to get people to feel that injustice, immediately feel that injustice of what the tax system is doing to people. I was a very light victim. There are people in this room whom I've spoken to who have terrible stories of their lives devastated by the IRS. If we can get those stories out, if we use narrative, because nobody has an ideological objection to narrative, right? You can't. All you can do is identify with it as a human being. We all have the same emotional and psychodynamics. We're going to get those stories out. And then the demand for some change, but significant change, comes out of the culture where all political change starts, to an extent that it can begin to put pressure on politicians. I'm out of my time, aren't I?
Absolutely.
All right, okay. I've got so much more to say about it.
So, by the way, Robin became a citizen on tax day, officially. So welcome to the United States. Now we come to Kelly Miller, and the question I have for you is, as I talk to people about tax reform, and I spoke earlier this morning about how if you are a general and your army has no morale, you are likely to lose every single war. If people do not believe tax reform is possible, you're likely to lose that war, especially if you want real tax reform. Now, if you want a Band-Aid, or if you want a little quick fix that'll expire in 5 years, then you might get it. But when it comes to morale and when it comes to what people think about tax reform, one of the number one enemies I hear from people are tax attorneys. Sure. That the people who want to keep the code complicated are tax attorneys who benefit from the code being complicated. So as a tax attorney, what was the case you would make to other tax attorneys as to why we should simplify the tax code?
Well, first I will say this about the operative question, which is why hasn't tax reform worked? I will echo what Jack began with. We have tax reform every year in this country. The Benjamin Franklin idiom that there is nothing more certain than death and taxes, I would paraphrase to say there's also nothing more certain than tax reform. The scale and the scope of that reform and how that reform is perceived to be reform or not reform could be the operative point. But we have reform each year. There's certain times, like in 1773 and in 1986, where that reform was more pointed. However, I think that when we talk about reform and what truly reform looks like, it might look to Jack like increased economic growth by lowering the rate, perhaps. It could look to looking at inflation indices. To me, as a tax attorney, I don't look at reform to be a bad thing, and let me tell you why. There are two essential questions or thresholds that we, as a country, I think need to address when we examine our federal income tax system. The first is the burden of compliance, and this is a point that Robin spoke to brilliantly. Compliance is a huge problem for the average United States taxpayer. Over 50% of the 1040 returns in this country that are filed each year claim the standard deduction. But 7 out of 10 taxpayers have professional assistants to prepare the return. You know, this resonates with you, right? So this points to us having an incredibly complicated system. I advise a lot of clients who have offshore accounts, and there's a great disparity in the clients that were using UBS and Credit Suisse to shelter millions of dollars and those who had inherited an account at UBS from a grandparent who was a survivor of the Holocaust. You want to talk about victimization, the rule book was the same rule book for both parties. There's some variance in how they come through, but the rule book is the rule book. The second question or threshold that we have to overcome is the bigger one. Compliance can be worked on. Compliance can be we can attempt to make compliance more streamlined. What is more difficult is neutrality, right? I mean, when we look back at the 86 reform, that was, I think of the time of the 86 reform, and it was a time where Whitney Houston had that song, One Moment in Time, I think. It was one moment in time. I don't know if we'd ever get that again, that delicate balance of Republicans and Democrats in the House and Senate that decided to reach that meeting across the aisle between rate and base. I don't know if we'd ever get that again. But even in that discussion, right, we saw concession. We saw non-neutrality when it came to the treatment of capital expenditures. And it was deemed to be a good thing because it was going to create this new spending amongst businesses, right? So it's how we tackle those two aspects of this question of reform that I think really, is the operative of question. As a tax attorney, I can tell you, I represent the victims. I represent the people that Robin speak about. I also represent a lot of companies that, quite frankly, are able to take the law as they see it. But it's not just the code. It's thousands of pages of IRS regulations. It's technical advice memorandum. It's general counsel guidance. It's private letter rulings that are not binding on another taxpayer but yet could be persuasive. It's knowing about the body of all of that guidance. It's not simply what the code says, but it's what the regulations, the notes to the regulations, the legislative history of the regulations, and all of this other IRS guidance that is out there can make the difference between me paying an effective marginal tax rate of 20% and Robin with the same AGI paying an effective marginal tax rate of 38%. So as a tax attorney, I welcome any solutions to help with the threshold of complexity and compliance and neutrality. But I think neutrality is the harder one.
So one of the areas I've always been very interested in, one of the reasons we set up this tax reform panel, is tax reform tends to be one group challenging another. The Republicans challenging the Democrats and putting them outside of the sphere, or the Democrats challenging the Republicans and vice versa. And one of the ways you actually get through real tax reform or real change in any policy area is you get as many groups on your side as possible. So one of the interesting things I thought you were talking about, Republicans tend to, when there's talk of the minimum wage, Republicans tend to attack the discussion directly, saying there should never be a minimum wage and it should never be raised, and there's not a lot of even caring pointed toward the people who really can't afford a two-bedroom apartment on a minimum wage, for example. One of the things I thought was really interesting when you and I were talking earlier was how wages actually could have risen in this country through the tax reform a little bit of tax reform we have had, if the Fed had not suppressed them. So how would you explain that to someone who works at McDonald's and who's has a family with one kid and who's working off minimum wage? How would you explain to them why tax reform works for them related to the minimum wage? Jack,
Well,
yeah.
Put that slide back up again, the one that's there right now. Back to this slide, the red line that's on the slide is not economic growth. It is the average change in the wages for the bottom 90% of earners in the United States. And the reason that's the statistic that we used for the line rather than economic growth was because wages are what the Federal Reserve looks at in trying to decide whether there's going to be inflation or not. When they look at the inflation statistics, the trouble with inflation statistics is they are lagging indicators. You don't have the statistic till you already have the inflation. And so they say, well, how can we get ahead of it? And so they pull the thing apart and they've focused on people's wages. Now, you can see there was, during the Reagan tax cuts, people's wages went up 6.5%. During the Clinton-Gingrich era, 13%. During the Bush era, 4.3%. And then at each time, you can see there were 9 tax or rate hikes by the Fed to crush the Reagan expansion, 6 during the Clinton Gingrich, and 17 during the Bush expansion. We had the financial crisis at that point, and they didn't particularly directly cause it, but they were the spark that set off the explosion. So go to the last. The reason why all this is important, and to answer Dan's question, this is that red line is the part of the red line that's there. The blue line is the top 10% of earners in the United States. And if you see, from the end of World War II until about 1971, everybody did about the same. In fact, people on the bottom 90% did better than the top 10% because everybody went up about 85%. Then we cut the cord to gold. The dollar had been, in one way or another, since the beginning of the Republic, tied to gold. Once we cut the cord to gold, we had chaos for a while. And you can see since 1971, the bottom 90% is actually down, okay? The top 90%, or the top 10% is doubled. And the top 10% has done well because their income is tied to corporate profits and equity values and those kinds of things. The Fed doesn't care about that. They're happy to have that go. It's just wages. When people's wages go up, they start to target it. And so it isn't as though there is some evil person sitting in the bowels of the Fed, some nasty economist who says, ha 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 ha, you barista, I'm going to take away your raise. But that's effectively what they do. And so that's why when I've been a Tea Party leader, and there was a survey that came out a few years ago that said, young people think there's no difference between communism and socialism. And my initial reaction was, as an old guy, it's like, oh, our education system is terrible. How can they believe that? And then I looked at this, and you know what? They're right. By the experience of their families, there's no getting ahead anymore, okay? I had the fortune or misfortune, I'm not sure which, to graduate from high school on the left side of that line, and I could reasonably expect that if I just worked hard, I was going to do well, okay? Now individuals can do well, but the Fed's going to be sure that, as an economy, as a society, the average person does not. And that's why our economic growth isn't what it's supposed to be.
So because we do want to have some time for questions, Geoffrey, you brought up an interesting idea. A well-reviled tax is the alternative minimum tax, or AMT. Even the National Taxpayer Advocate has suggested getting rid of it. But you were talking about this a little while ago, and I thought it was very interesting. You actually suggest the opposite.
Yeah, I actually think you could use the AMT as kind of a life raft as the quickest and easiest way to do substantial tax reform. The reason, so in the late 70s, early 80s, Congress became concerned that people were claiming too many deductions and deducting away all of their taxable income, so they weren't paying enough. So in 1982, Congress passed the alternative minimum tax, which is basically a flat tax with a big exemption on the front end. So for for single filer, it's like $50,000 versus $50,000 exempt. Married filing jointly, I think, is the first $80,000, and then you pay about a 26% tax rate on everything. Beyond that, with almost no itemized deductions allowable. Now, people hate the alternative minimum tax because you go through whether it's your personal income taxes or your business, you go through the whole year trying to minimize your end-of-year tax burden using the regular tax system. Now, this is a parallel tax system that creeps up when you do your taxes at the end of the year, and you find out that although you've reduced your regular tax liability, now you have to pay this AMT because you can never pay less than the AMT liability. So it's the minimum that you would ever pay. What I think would be a great idea is to just basically gut the entire regular tax code because this is a parallel tax code, and by default, everyone would move to the AMT, which by all reasoning is basically a flat tax, and ultimately, politically speaking, probably the best form of a regular tax system that we could ever get through Congress. In fact, it's probably it's. Now, I'm a big fair tax fan, flat tax fan, et cetera, but it's probably better than anything we could actually push through. And because you don't have to create any new language, it's literally just a straight-through bill. So you could almost get this done in a single day. So I think that's something worth exploring, and kind of maybe a little bit of a radical idea that I haven't heard a lot of people talking about.
This is the revolution, so we welcome radical ideas. Robin, so as someone who has just recently come to the American political system, but you've already seen quite a bit, you actually I didn't read everyone's bios, so we had more time, but you actually had started the Blue Republican movement, which got liberal voters to vote for Ron Paul in the 2012 election cycle. And so how do you address the fears of maybe transition, as far as how do you address the fears of the lower income people that any new tax reform is going to have such a huge impact on their wallet that they could actually be poorer than they are now, or it's all about cuts for the rich and it hurts the poor in the end of the day. You hear this rhetoric all the time from the left side of the spectrum. So how would you address the fears of people who believe that a flat tax or a fair tax would actually end up hurting them in the end?
If that's the case, if they believe that, then we've just done a very weird and bad job of in terms of the connotations that we've allowed tax reform to have. There's nothing in the meaning of reform, which, by the way, to your point, I think for me has to mean significant change in the experience of people. Like step change in the experience of people. Remember that the only legitimate ends of all politics is people, the well-being of people. And if we talk in that way, everybody starts to resonate with that, whether you're on a minimum wage or a huge wage. I would actually go to very human principles. Here's one. We do not accept in any area of our life constant or repeated fear, repetitive fear. We don't accept that from our government, from anything, except the tax system and the IRS. We culturally have accepted that it's okay to be terrified when you've done nothing wrong, only with respect to the IRS. Now, in every other part of our life, we call that an abusive relationship, right? That's what that is. We're in an abusive relationship. So I would, I'm kind of going around to go back to where we started in a way, because I would be framing the victim stories in that way. Again, it's completely independent of where you are economically, politically, or socially. Heads nod to that, because even the low-income person can relate to that. We're all, as I say, we're all emotionally built the same way. Now, what we've then got to stop doing is getting hung up on the theory of what the reform's going to look like, right? Let's not even talk about fair tax, flat tax, this percent, that percent. No. Let's not do that until we've got everybody on side on the humanity, the humane principles. I would start there. I would just shut up quite a lot about the things that aren't working. Because as I say, a significant change in the experience of human beings who are hurt should not threaten those who aren't being hurt maybe right now. I mean, it just doesn't even follow. And we've done that to ourselves. It's worse than bad messaging. It's putting the cart before the horse. I would stop putting the cart before the horse.
So, Kelly, you have a lot of these special interests that are ridiculed in the tax spheres as your clients, a lot of the big corporations who have special loopholes. So another the argument I hear from people is, oh, well, the special interests will never allow it. They'll never want tax reform. They'll never want the tax code simplified, in particular, when I'm talking about tax reform.
Sure.
So how would you address the fears of those major players when it comes to what tax reform might look like for their business?
Certainly. And I just want to be very clear that for all of the major large companies that we work with, I have clients who are before the IRS or the United States Tax Court with innocent spouse relief. I have clients that are before the court on deduction. I represent a lot of pro bono clients. I mean, a lot of my clients are individuals as well. But I think to your question, and I think to your point too here, Robin, about the humanitization, I certainly think that is very compelling, extremely compelling. I think, unfortunately, it's far more compelling at the individual level than it ever will be at the corporate level. A case in point, cancellation of indebtedness income. This was a huge factor in the mortgage debacle, because we saw, when I was an attorney advisor at the U.S. Tax Court, we saw cases come before the court where individuals who were under the water on their mortgages would then be relieved of that debt, but then hit unknowingly, because they weren't aware of the complexities of our tax code and the rules, that they would be hit with a tax bill, sometimes into hundreds of thousands of dollars. Of course, legislation was passed that changed those laws, but I think that was the example of there was a moral outrage, right? There was a tenable result that could be achieved. That result was amenable to the political parties, and we saw reform. Again, reform can be the piecemeal. We saw reform in that area. I think with the corporations and businesses, look, we hear constantly from our clients about the U.S. corporate tax rate as opposed to tax rates in other jurisdictions worldwide. So when you have a client that's looking at a jurisdiction like Malta or Gibraltar, where they're looking at a 5% effective rate, Here in the US, no company is paying 25% effective tax rate, but they're certainly paying more than some of those low tax jurisdictions. It's very difficult to compel them to be proponents of change and reform unless it helps their productivity and their bottom line. Because really in this, in this global environment, that's what it can be. The difference between success and failure can become that margin. So it can be challenging. I think, I don't think you can have one without the other. I think 1986 showed us that. There has to be individual reform, and there also has to be corporate reform, certainly as a part of something that's revolutionary. But it's just very difficult. I think it's going to be extraordinarily difficult as we go forward as well with what we see at the OECD. I see this as being to me, that's the burden. The individual issues are the winners. I mean, that's where you can get compelling stories, where you can make the humanity make sense, where you can show the effect of dollars to savings, to Jack's point. But the corporate side is challenging.
You could kind of bring up the Tax Foundation had a panel earlier, and one of their panelists from the Atlas Network was talking about how the UK Taxpayers Association defeated an increase in the beer tax by buying an absolute ton of beer coasters.
Sure.
And putting them in all the pubs and all the bars, which basically said, oh, by the way, whenever you buy 2 pints of beer, you're buying another one for the government office down the street.
Brilliant.
That amount of outrage, that amount of personal impact actually changed those laws and kept the hike from coming in the beer tax. So what I want to do now, and this is, when it comes to tax reform, there's no way you can discuss it all in an hour or 2 hours or 10 hours or even 30 hours. That you have to present new ideas and engage with those ideas, but we don't really have that much time to flesh them out. Unfortunately, we could probably do this for a few more hours. But what I want you guys to do is have you guys think of what is it that the average person can do? What is it that a Freedom Fest attendee, who, by the way, you guys are above average, I keep using that term, but what is it that a Freedom Fest attendee can do to advance tax reform, to advance outrage, to make sure that we actually get a tax revolution or a comprehensive tax reform in this country? Go ahead and start with Jack.
Well, there's 3 things that I can think of, and simply the first thing is whenever you speak with your elected congressman or your senator, mention the Fed and why is the Fed suppressing the economy and people's wages. The second thing is, and they'll probably be puzzled because they don't know much about it either. The second thing is you should go on taxrevolution.us and sign up to get all the information and all of the things that, the remarkable things that they're doing. And the third thing I'd ask is go on our website too, putgrowthfirst.com. There will be things in the coming new session of Congress. There'll be bills that we'll send out alerts about that will specifically say, call your congressman and get him to co-sponsor such and such. So.
Actually, I think there are 2 things, both pretty simple. One is to go out and make a lot of money so you can afford to contribute to groups like Tax Revolution Institute. Secondly, the big problem with tax reform, as we all know, is that Congress is constantly divided, and there are a gajillion special interests who want to have their own little carve-out and provision in the tax code, which is what makes substantial tax reform so difficult. So I think it's always going to be difficult to pass it through Congress unless you have very strong leadership from the top down that is willing to put their weight behind it. And that starts with working to elect a president and leadership in both chambers that see that as a very high priority. So, volunteering your time in those ways could be helpful as well.
Thanks. Tell stories, which means go and find stories about people whose lives have been screwed up and then share those. Don't share your favorite abstract arguments for your favorite abstract tax system. You can do that later when we've created enough outrage. Stories about individuals. We want narratives. Also, if you are going to talk about the tax system, and there is a place for it, of course, speak to the injustices. Speak to the loopholes because you want the cronyism. It's the abuse of privilege that is written into the tax system that upsets every part of the political spectrum. That's a winner, right? And especially, again, the politics of the left the left really don't like abuse of privilege. The tax system is like the 75,000 pages of abuse of privilege. You know that, because if it wasn't, it would only be 7.5 pages, right? That's what the loopholes mean. So approach it from that way. Speak to injustice. And yes, if you have your own stories, please do go to auditirs.com and share them, because they will contribute to an audit that will involve the amassing of stories across the country of IRS abuse that we will then be able to turn into, we'll be able to find patterns from, right, and shine light on them. And also in some cases actually publicize stories with obviously the permission of those affected, so that we can start to generate this outrage in the culture. And one last thing is, if you want to know how to affect huge political change starting in the culture, go buy my book. If you can keep it, I will sign it straight after this at the author's table. Thank you.
Well, I certainly have no political position to speak in my role here. I have to maintain a very nonpartisan view. But I do encourage, any taxpayer to really know the system and to seek counsel if they are having difficulty with understanding an IRS notice or an IRS action. And there are some wonderful organizations around the country that work with taxpayers of all means to answer those questions. I think I will echo the theme that I've heard from my distinguished co-panelists about sunlight being the best disinfectant, and I am thrilled to hear about this initiative to audit the IRS, especially as somebody who represents people who are being audited by the IRS. And we have done those things. I think between FOIA requests and demanding that the service be accountable for when we find there to be a disconformity, arguing for really there to be no disconformities and within the system of how the tax laws are applied to all taxpayers, and that I think is the rub. We need to encourage that there be uniformity and not a lack of uniformity or a violation of that principle across all taxpayers. And I would echo what Jack said, that I think that begins with advocacy to your elected representation.
I want to step back for a second to 3 of the political movements in this country in the past 15 years that have been pretty much the only 3 that led to, or very close to the only 3 that led to a massive amount of greater liberty for people, agree or disagree with them. They are the legalization of gay marriage, the legalization of marijuana, and open carry for the states. And there's actually an article online called Gays, Guns, and Ganja, which I encourage you to go to, that you can watch the states start to move in the direction of each of these movements. And when I look at tax reform as more of a political strategist, I see that one of the reasons tax reform has not advanced, even though there has been a certain amount of outrage over tax reform, one of the reasons it has not advanced is we realize that if you are going to do tax reform, you have to go big. You can't go in steps. Yet most policy goes in steps. Most policy starts at medicinal marijuana and goes to full legalization of recreational marijuana, for example. And what we don't have in tax reform is we don't have steps. We also have taken, in our messaging, we've taken the power out of the people's hands. Most people are not aware that it takes 3% of the population of any county or any community or any city or any state or any congressional district to flip nearly every election in the entire country. The breakdown is simple. 100% of the population, 70% of them are actually eligible to vote. Out of those 70%, 40% of them are actually registered. Go down to 20% who actually vote on election day. 7% almost always vote Democrat. 7% almost always vote Republican. That's 14%. Now we're down to 6%. What do you need? 3% plus 1. This has been proven in elections across the entire country, whether it's in primaries or whether it's in generals. And what we've done is we've said, Congress, you have to fix it. Congress, you have to change this country. Congress, you have to take tax reform forward. And yet what we have seen, whether it's open carry, the state of Idaho recently legalized carry without a license. And the state of Idaho did not introduce a bill that would take guns away from people who were suspected of terrorism. That was Congress. Congress continues to advance anti-liberty legislation where the states and the localities are where people can win. And what this movement needs is momentum. And the way we're going to get that momentum is to start at the state and to start at the local level, where you can neutralize the tax code at the local level. Stop using the tax code as social engineering. Stop using the tax that Philadelphia passed a soda tax recently. Why does soda get taxed more than beer or alcohol? Do we not want people to drink soda or beer? Why do we use, if you want to ban it, ban it. Don't use the tax code to regulate. This is a simple process that can be initiated at the local level, then up to the states, and then up to federal tax reform. So we take tax reform from a theory to reality. We can show that in this county in Pennsylvania, they had real tax reform, and it worked for them, and look at the economy, and in this county in Pennsylvania, they didn't. That's how you advance tax reform in this country, from what I have seen, is momentum and starting at the local level. That is two things this movement currently does not have. And in my view, that is one of the reasons that tax reform has failed, as well as many of the other reasons you guys have brought up. I hope you've seen a lot of new ideas come into this discussion. We have a Tax Revolution Institute table and Audit IRS table out there, and I'll open up the floor for questions if you want to step up to the mic.
My name's Peter Parenti. I'm a board-certified estate planning, probate, and tax lawyer in San Antonio, Texas. I also have my LLM in tax from NYU, and I'm a partner in a company called Wealth Counsel. And for Wealth Counsel, we provide estate planning knowledge and education and tools for estate planning lawyers. And I wrote a course called Tax Camp, taking the intimidation out of the Internal Revenue Code for the estate planning lawyer, because estate planning lawyers don't necessarily need to know everything about the Internal Revenue Code that I, as a tax lawyer, need to know. So my theory as to why tax reform doesn't work is because people over-exaggerate the Internal Revenue Code. They over-exaggerate 75,000. No, the Internal Revenue Code is not 75,000 pages. So, Title 26 is the Internal Revenue Code. Subtitle A, income tax. Chapter 1, income tax. We're talking about code sections of less than 2,000 sections, and there's only 2 sections of the Internal Revenue Code that affect every taxpayer, and that's Section 1, the tax rates for individuals and estate and trusts, and Section 11, the tax rates for corporations. So my point is this: let's stop over-exaggerating the Internal Revenue Code and tell people the reality. It's only Chapter 1 of the Internal Revenue Code that would need any kind of reforming if we want to change anything about income tax. So let's stop over-exaggerating about this 75,000 pages. It's nonsense. That's not the Internal Revenue Code.
What is your question?
So, no, I'm just making my point. That this is why I say that tax reform goes nowhere, because people are overwhelmed. This is why I call the course Taking the Intimidation Out of the Internal Revenue Code. I simplify it all down to 500 sections that estate planning lawyers need to know about.
Thank you.
I too probably will not have a question. I'm going to have a statement, and I think we're missing the whole thing. The United States has 330 million people. In my opinion, no tax reform will ever work in a country where it's run out of D.C. Never, unless it's as simple as we possibly can get. I've been doing taxes for 30 years, and I'd like to compliment our recent citizen and I think you're on the right track. I think we have to tell horror stories, and I got lots of horror stories. I can remember going to a seminar, a tax seminar, where the top people, except the commissioner, was at it, and the head of collections did a presentation, a PowerPoint presentation on the fraud on the earned income tax credit. And this is like 5 years ago when she was talking about, going up to $50 billion a year. It's now $300 billion a year. And it gets worse. I mean, the amount of fraud is a disgrace, and we really need to go back to square one and say we need a revenue system. How best can we collect revenue in this country? Thank you.
Thank you. One of the things I'll note about some of the statements that have been brought up is that even though that didn't necessarily come with a question, one of the things that was interesting about the Republicans' Better Way plan is they really only invited Republicans. And if you're going to have tax reform in this country, you need to have all sides of the aisle. You need to have a lot of different discussions. And when I was talking about breaking it up into localities, I am talking about making it easier for people to swallow, making it easier for people to handle. So while I may not agree that the tax code is not, in fact, 70,000 pages, because you have to include the regulations if you want to understand the code for a lot of different people, I do agree with the principle that we need to break this down into bite-sized chunks. How do you eat an elephant? One bite at a time. If you tell people you have 75,000 pages to fix right now, then they may be very intimidated by that and may not want to engage in that. So I do appreciate you bringing the ideas to the discussion, and I did want this to be an open discussion. And thank you as well for talking about the horror stories, because if we can do that, we can really, I believe, change this country.
Yeah. Actually, I'll disclose that I actually have two comments. First of all, I had a very good friend of mine whose name is David Morgenthaler, and he was the man responsible for the capital gains tax cut in 1978 that reduced the maximum capital gains tax rate from about 90% down to 28. And what he did is he organized other people within the investment community to each one target their individual congressman. And they didn't pitch this of we need to have very wealthy people pay less taxes. That was not their argument. And you have to keep in mind, and actually that change was strongly opposed by President Carter. Now, what actually happened at that thing is they went to each individual congressman, who knows which each individual congressman, and they argued it as a jobs program. And they talked about there's not enough investment in your community with plant and equipment and so forth. And the way you're going to turn the economy at that time in the 1970s was actually a pretty weak time, to some extent, actually better than it is now. And what they did is they actually organized that way, and you had a very large majority of Democrats in the House and in the Senate. And they actually overrode Jimmy Carter's veto. You had a majority Democrats, and it was an overridden veto. And so the thing about this is the message is not how do we make wealthy people pay less taxes. That's going to go nowhere. You cannot make an alliance with Democrats on that. Let me throw another dimension about this also, is if you look at economics more broadly and you also take together the tax code in combination with entitlements. And to some extent, within the most flat taxes, they talk about a basic level of a negative income tax or otherwise. You could probably, if you think about it, most of our entitlement programs have the benefit withdrawn as the person's income goes up. So a person of modest income might see a $100 increase in pay, and what they'll see in their pocket is $30. So in effect, they're paying a 70% tax cut. So because these flat tax proposals have this idea of a negative income tax with it, you combine it with entitlement reform. And people who go on food stamps or other things, those programs, let's just make the assumption those programs aren't going to go away. You're going to pay out that money anyway. The people who are on those programs found it very indignant to constantly requalify for these programs. And if you combine entitlement reform, you can actually get many people of lower income, and you can basically tell everyone else, you're going to be taken care of. And if you look at average tax rates as opposed to just the progressive tax system, and you combine entitlements, it will look far more progressive, even though you're not making the change. So if you make entitlement, if you're making reforms the way we talk about it among the wealthy, and you combine it with the poor people and the entitlement programs, you can portray it as being far more progressive. And what really ultimately matters is the combination of the two, not either one independent. By the way, was that a question? Oh, I'm sorry.
Not quite. One more, and we've got to get out of here.
The issue of the day seems to be income inequality. And as I think most of us realize, income inequality is a good thing, not a bad thing per se. But if you have a system in which the 90% are held back, that's not a good system. And that slide, which shows this incredible divergence where the top 10% are doing just fine, but the bottom 90 are not, is extremely powerful, and I'm not sure, how that gets to people and how it can be fully explained from economic data and so on and so on. But I guess my sort of question, questions are very expensive. But my sort of question
Especially if
is,
they come from the IRS.
that's right. How do we get that out? Because it seems to me that 20 years ago, I remember Ron Paul talking about the Fed and me thinking, I know what you're talking about, great issue, except nobody cares, nobody knows about it. If people knew the Fed as the group that stops poor people from gaining wealth, as the engine of economic inequality, that's a whole different ballgame. And so it seems to me that's a kernel of gold. How do we make it work?
I couldn't agree with you more. And in fact, that slide, we've used that slide on Capitol Hill, and actually found that there is bipartisan concern about the Fed. We actually got Marcia Fudge, and some of you know I'm from Cleveland, and Marcia Fudge was the chairperson of the Congressional Black Caucus. We got her to agree to co-sponsor a bill auditing Fed policy. She agreed to it, and then she didn't actually do it because the politics were so. But by showing her, it's your constituents that are suffering here. The Fed is suppressing the wages of your constituents. And so the bottom line is Robin's attitude and Tax Revolution's attitude is the answer. We have to make this personal. When we made it personal and talked with Congresswoman Fudge about her constituents and how they were affected and how income inequality, we agree, we're rich guys comparatively, and we agree income inequality is a problem, and it's being caused by the Fed. All of a sudden, there was a difference in the attitude. Her staff was great. They worked with us tremendously. And so personalizing it.
Can I give a one-sentence answer as well?
Go ahead.
That's so kind of you. We need to start talking of the tax system, to your direct question, as a cause rather than a means of treating symptoms of social and economic injustice, and use those words even if you don't like them because you're conservatives, because they're great trigger words for the people we need to bring with us. Yeah, cause, not effect.
Very glad to have our distinguished panel with us. If you can give it a round of applause.